Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SIONNA Therapeutics INC quarterly report. SIONNA Therapeutics Inc. offers a range of businesses and services focused on developing medicines for the treatment of cystic fibrosis, CF. The company's primary services include research and development of CF treatments, clinical trials for various CF medications, including plus galicaftor SION-2222, a TM-directed CFTR corrector in Phase 2 trial plus navicaftor, SION-3067, a potentiator in Phase 2 trial plus SION-109, and SION-2851, intracellular loop 4 directed and TM-directed CFTR correctors in Phase 1 trial plus SION-719, and SION-451. Nucleotide binding domain 1 stabilizers in Phase 1 trial. These services are provided through the company's clinical stage biopharmaceutical business. The significant increase in SIONNA Therapeutics, Inc.'s stock price over the past year can be attributed to several key factors. The most notable contributor is the positive Phase 1 clinical trial results for its cystic fibrosis drug candidates, SION-719 and SION-451. These first-in-class nucleotide binding domain 1 (NB-DUN) stabilizers showed promising results, exceeding target exposure levels in studies involving over 200 healthy volunteers. Additionally, the company's advancement to later-stage clinical trials, including a Phase 2A proof-of-concept study for SION-719 and a Phase 1 trial for SION-451, has generated excitement among investors. The strong financial position of the company, with approximately $325 million in cash and cash equivalents as of September 30, 2025, is also a significant factor. Furthermore, positive analyst coverage and ratings have contributed to the stock price increase. Several firms, including Raymond James, Freedom Capital Markets, RBC Capital, Jones Trading, and others, have initiated coverage with buy or strong buy ratings, citing the company's potential for success in the cystic fibrosis field. Lastly, SIONNA Therapeutics' better-than-expected earnings report on August 11, 2025, has also contributed to the stock price increase. The company's reported earnings per share of $0.41 topped analysts' consensus estimates of $0.68, further solidifying investor confidence in the company's prospects. The primary drivers of revenue growth or decline for a pharmaceutical company can be summarized into several key areas. Regulatory approvals, such as obtaining FDA approval for product candidates, play a crucial role in determining revenue growth. Clinical trial success and market acceptance by physicians, patients, and third-party payers are also essential factors. Pricing strategy and competitiveness of product candidates compared to existing products are critical in driving revenue growth or decline. Competition from established companies with approved products and greater resources can significantly impact revenue growth. Additionally, changes in regulatory requirements, healthcare reform initiatives, and government investigations and penalties for alleged violations of law can all affect revenue growth. Other key factors that may impact revenue growth include the ability to license intellectual property on commercially reasonable terms, success in developing proprietary intellectual property, and compliance with healthcare laws and regulations. The company's ability to negotiate licenses for intellectual property rights, maintain existing intellectual property rights, and obtain necessary licenses for commercialization are also important drivers of revenue growth or decline. Overall, a pharmaceutical company must carefully manage these key factors to achieve revenue growth and remain competitive in the market. Net income and profit margins overview. The company's net income has worsened over the 9 months ended September 30, 2025. Initially, it reported a loss of $-45.8 million, but this increased to a loss of $-54.8 million. The decline in net income is attributed to potential price controls, reimbursement constraints, and marketing cost disclosure requirements, which may have contributed to decreased profit margins. The company's financial performance indicates a concerning trend of negative operating cash flow. The data from 2025 and 2024 reveals a decline in net cash used in operating activities, with a significant drop to $-41,671,000 in 2025 compared to $-41,006,000 in 2024. Furthermore, the overall operating cash flow is reported as negative $142.1 million. This suggests that the company is struggling to generate sufficient cash from its operations, posing a risk to its financial stability and future growth prospects. The management of this company is cautiously optimistic about its outlook. Despite facing numerous risks and challenges, the company has made progress in clinical trials and obtained regulatory approvals for some products. Management believes that strategic transactions such as acquisitions, partnerships, and licensing agreements could help mitigate these risks and increase commercial opportunities. However, management also acknowledges the uncertainty surrounding regulatory approval, market acceptance, and competition from established companies like Vertex. To manage growth effectively, the company must navigate these challenges while maintaining a strong financial performance. Overall, management is focused on managing risk and positioning the company for long-term success despite the current uncertainties. Concerns about inventory buildup and supply chain disruption are prevalent in the company's financial summary. The potential for inventory buildup is exacerbated by tariffs, trade disruptions, and uncertainty around accessing funds, page 17. Furthermore, insufficient product candidates or materials necessary for clinical trials pose a significant risk, page 23. The reliance on third-party manufacturers also increases the likelihood of supply chain disruptions, including production shortages, unacceptable cost/quality, and termination of engagements, pages 34-35. Additionally, environmental and health regulations may be compromised by suppliers, leading to further disruptions, page 57. These concerns underscore the need for careful management of inventory and supply chains. That concludes the financial summary for SIONNA Therapeutics Inc. Feel free to comment below, and I will be happy to answer them when possible.